The air crackled with tension. Phones buzzed incessantly. Traders stared at their screens, faces pale with disbelief. Lehman Brothers, a titan of Wall Street, a 158-year-old institution, was on the brink. The year was 2008. The global financial system teetered on the edge of an abyss. Lehman had flown too close to the sun, its wings melted by toxic assets. The consequences of its fall would reverberate around the world. Panic spread like wildfire through the financial markets. Banks stopped lending to each other. Credit markets froze. The world held its breath as the once mighty Lehman Brothers filed for bankruptcy, the largest in American history. This wasn't just a bank failing, it was a system imploding. The world watched in horror as a global financial crisis unfolded before their eyes. This is the story of how one bank's collapse triggered a meltdown, exposing the fragility of the global financial system. It's a cautionary tale of greed, risk, and the devastating consequences of unchecked ambition. Lehman Brothers began in 1850. Three German immigrant brothers, Henry, Emanuel, and Mayer Lehman, opened a modest dry goods store in Montgomery, Alabama. They traded cotton, the lifeblood of the South. Their business thrived. The brothers expanded, opening offices in New York City. Lehman Brothers became a major player in the burgeoning market for railroad bonds. Wall Street beckoned. Lehman Brothers became a full-fledged investment bank. They financed industries that built America: railroads, oil, and utilities. Their reputation for shrewd investments grew. The firm weathered the Great Depression, a testament to its resilience. By the late 20th century, Lehman Brothers had transformed into a global financial powerhouse. The firm embraced risky but profitable ventures, pushing the boundaries of traditional banking. The late 1990s and early 2000s saw a dangerous trend emerge: the rise of subprime mortgages. These were loans given to borrowers with poor credit histories, people who were much more likely to default. But Wall Street saw an opportunity. They bundled these risky mortgages into complex financial products called mortgage-backed securities. These securities were sold to investors around the world, hungry for higher returns. Banks like Lehman Brothers raked in huge profits, fueling a housing bubble of epic proportions. House prices skyrocketed. Borrowers took on more debt, enticed by low interest rates and the belief that housing prices would rise forever. The stage was set for disaster. As early as 2006, cracks began to appear in the US housing market. House prices plateaued and then began to fall. Borrowers, many of whom had taken out mortgages they couldn't afford, started defaulting on their loans. The subprime mortgage market imploded. Lehman Brothers, heavily invested in these toxic assets, ignored the warning signs. They continued to underwrite risky mortgages and invest heavily in mortgage-backed securities. Their CEO, Richard Fuld, remained bullish, believing that the market would recover. His hubris would prove to be Lehman's downfall. The weekend of September 13th to 14th, 2008 was a fateful one for Lehman Brothers. Negotiations for a government bailout or a private sector rescue failed. The US government, fearing a systemic collapse, had already bailed out Bear Stearns, another Wall Street giant, earlier in the year. But Lehman's position was even more precarious. Its balance sheet was loaded with toxic assets. The government refused to bail out Lehman, fearing that it would set a bad precedent. On Monday, September 15, 2008, Lehman Brothers filed for Chapter 11 bankruptcy protection. The news sent shockwaves around the world. Section 6, Global Contagion, a crisis spreads. The collapse of Lehman Brothers had a domino effect on the global financial system. Banks, already reeling from losses on subprime mortgages, became even more risk-averse. Interbank lending, the lifeblood of the financial system, dried up. Credit markets froze. The crisis quickly spread beyond the financial sector. Businesses couldn't get loans, consumers cut back on spending, the global economy plunged into the worst recession since the Great Depression. Millions of people lost their jobs, their homes, and their savings. Section 7. Lessons learned, the long road to reform. The collapse of Lehman Brothers exposed the deep flaws in the global financial system. Lax regulation, excessive risk-taking, and a culture of greed had created a perfect storm. Governments around the world scrambled to stabilize their financial systems. The US government passed the Dodd-Frank Wall Street Reform and Consumer Protection Act in 2010, the most comprehensive financial reform legislation since the Great Depression. The act aimed to prevent future crises by strengthening financial regulation, increasing transparency, and protecting consumers from predatory lending practices. Section 8. Echoes of the past. Are we safe today? 15 years after the collapse of Lehman Brothers, the global financial system appears to be more stable. Banks are better capitalized, regulations are tighter. But have we learned the lessons of the past? Some argue that the fundamental problems that led to the 2008 crisis remain unaddressed. The financial industry is still too big, too complex, and too interconnected. The rise of new financial technologies, such as cryptocurrencies and decentralized finance, poses new challenges to regulators. The potential for another financial crisis, perhaps triggered by a different set of factors, cannot be ruled out. Section 9. The unfinished business of financial regulation. The collapse of Lehman Brothers was a wake-up call. It showed how quickly a seemingly stable financial system can unravel. It highlighted the need for constant vigilance and proactive regulation. The task of preventing future crises is never truly finished. It requires ongoing dialogue between policymakers, regulators, and the financial industry. It demands a commitment to transparency, accountability, and a recognition that the pursuit of profit must be balanced with the need for financial stability. The ghost of Lehman Brothers serves as a stark reminder of the high stakes involved.